Hey, it's Michael Saul, but everybody calls me Tiny, and this video is, will the NASDAQ hold up the lift? This is stock market analysis for the week of February 18th, 2019. If you would like to receive inter-week updates, www.attackthemarkets.com. Put in your first name, your best email address, follow the directions. You will be on the list. Facebook group, facebook.com/group/attackthemarkets. If you never want to miss a video when one is uploaded, click subscribe and smash the bell, and you'll be notified when I upload a new video. And if you like what you hear, give me a thumbs up and leave a comment so I can move up the rankings in YouTube. Okay, terrific. Let's take a look at what's going on in the market. I'm recording this actually at 8:10 a.m. on President's Day, on February 18th. The market is closed, the U.S. market is closed today, I should say. So it's going to be a short week. Now, last week, the bulls pressed the issue, got through the 200-day moving average on the S&P 500, and are now headed up to this horizontal line that I've drawn in here, which is a horizontal ledge of resistance. Okay, I think that we're going to get there. I think that we made it through the 200-day moving average. We may want to pull back a little bit first, but I think we are going to get up to that resistance. And what happens when we get there? Well, that's, the big question, right? Are we out of the woods as far as the downside is concerned? Well, we are over the 200-day moving average, so I am no longer looking for a retest down. However, not everything is, in my opinion, champagne and roses here, and we're going to talk about that in a second. I'm not a bear. I'm not looking for a bear market. I was never looking for a bear market. You can go watch the old videos over the weeks. I was just looking for at least a try for a retest down to those December lows, but it never happened. Now we're over the 200-day moving average, so now I have to switch course, but I am not going to be full on, hey, we're going to new highs until we clear that horizontal ledge. Rest assured, if we can get above that, what I would like to see, I'd like to see us come up and test it, maybe pause below it, and then break through, or break through, come back and kiss it goodbye, and then go. I will be looking for new highs, and I believe they're going to happen now. I believe they're going to happen within the first quarter of this year. We have, 5 weeks, 6 weeks left, whatever it is, that's irrelevant. And I think there's a very good shot we get there if we clear this horizontal ledge, and if the other factor that I'm a little bit concerned about, and I gave it away in the title, the NASDAQ, can get going as well. We'll get there in a second. Let's look at the rest of the major indices. Here's the Dow. Dow's on its way. It's rocking and rolling. Again, I don't really put much weight in the Dow over the S&P, NASDAQ, and the Russell. Here's the Russell headed to the 200-day moving average. Now, the Russell hasn't caught up yet to the broad market. It's still lagging, but it definitely is getting better in gear, I would say, more in gear, better in gear, more in gear to the upside here. But watch the 200-day moving average, because that is resistance. It's much watched. You saw what happened on the way down at the 200, right? It paused there and then it broke through. So let's see what it's going to do here. I would love to see a similar pattern on the upside. See, I love to see pauses at key decision areas, and because that's going to be where you can really lean in, because you know where you're wrong right away. And that's a really nice place to be, right? The most important part about taking a trade is not how much am I going to make from this. No, it's how much risk am I going to have, and why am I going to have that risk, right? Think about it. If you can define your risk, you can then pinpoint how many shares you're going to trade, or how many option contracts you're going to take, whatever you're going to do. Okay, but if you're just sitting there, well, that looks like resistance, so let's short here. Well, where's your stop? Well, I don't know. Well, let's use 8%. Let's use 10%. Let's use 3 points. Let's use 5 points. Just random numbers. It doesn't make sense. But if you have a pattern you can lean against and put the stop where the pattern is wrong, that's a different story. But more on that on another video, of course. All right, so that's the Russell. Here's the mid-caps. Mid-caps got through the 200-day moving average. So that's good. Again, I'd like to see a pause here, or maybe a push and a pause, and then it goes. And then let's take a look at the NASDAQ. The NASDAQ is absolutely lagging right now. Okay, it's having its struggles at the 200-day moving average. It did not clear up above the 200-day moving average. Doesn't mean it's going to. This is not a sell signal in and of itself. But right now, it is definitely an amber flag. It's not a red flag for me, okay? I'm not sitting there going, oh my goodness, get out the longs. It's ridiculous, okay? We're over the 200-day moving average on the rest of the indices with the exception of the Russell, and we're sitting on the 200-day moving average right here on the NASDAQ. So let's see what happens from here. We have a wedge, okay, and a lot of people say, oh, it's a rising wedge, that's bearish. No, it's not. It's just a consolidation pattern. Okay, it can go either way from here, and we've seen plenty of rising wedges squirt out to the upside, plenty of falling wedges squirt out to the downside. So this is a rising wedge. It is a contracting of range, and what does contraction lead to? Well, I mean, it could stop leading to this, but in the history of the market since day one, periods of contraction have led to periods of expansion. So unless there's going to be a complete paradigm shift and it's not going to work anymore, we can expect to see some range expansion here. All right, it could be range expansion to the downside, absolutely, but then we have to watch the 20-day moving average, which is this red line, or the 50, which is the cyan line. But if this expansion comes out to the upside, then we can get that momentum push that I'm looking for in order to confirm, hey, we're going to new highs here, at least in the broad market, but probably here as well in the Russell. Yeah, there could be divergences. We could get to new highs in some of the indexes and not the others, but I am looking for new highs here if the NASDAQ can get out of this, can move higher off that 200-day moving average rather than have it stall out the price action right here. Okay, so that's what I'm focusing on this week. And it is a short week, but that doesn't mean that stuff can't happen here. All right, let's take a look at some of the sectors. Let's see the semiconductors. Yeah, I mean, look, if the semiconductors are any clue, they're up and running. Okay, here's NVIDIA starting to try to hammer out a bottom here, but I mean, it's a nice looking pattern here, but again, it hasn't really cleared the level that I want. It would have to be this peak right here by 175.81. You notice how this peak came up to previous support. Previous support now becomes resistance. See if it could clear that. Here's KLA Tanker, and that's in a nice consolidation here over the 200-day moving average. See, these are the patterns that I like to see. I was just talking about this, right? I like to see these types of patterns because you can draw your lines in. My lines may be a little kablooey here, but you could draw your lines in here, and then you could wait for this to release out of it. Okay, trail your stops, and if it comes back down inside the pattern, you get out. It's a small risk. Okay, these are the types of patterns I like, not trying to pick, oh, that's the top, just short, oh, that's it, oh, no, wait, it's keep going, oh, that's the low, you know, just let's buy it here. Well, what happens if it keeps going lower, right? So these are the types of patterns where, yeah, you're going to lose some, and guess what? These are the types of patterns that also lead to big dynamic moves. So you may lose 3 or 4 in a row, small losses, and one winning trade could make up for all the losses plus a few more. Okay, that's what keeping your risk small does. Okay, but again, for another time, for another video, I'm not going to continue to sit here on my soapbox and tell you to risk small. It's your money. You could do whatever you want with it. All right, let's take a look at Intel. Yeah, Intel started to move away. Now, remember, in the last video, I was talking about how sloppy it was. Now it's starting to get some momentum away from this congestion. I'd like to see a pause, maybe a small pullback. Look to get on board there to see if, how that's going to run. Here's the banks. So the banks are in a consolidation as well, but notice they're between the 50 and the 200 day. I like to call this ping pong because a lot of times it will go back and forth between these two, but it is starting to move. Let's take a look at Bank of America. Bank of America, another stock that I want to watch because it is in a consolidation. I almost said consolidation. Right at the 200-day moving average. Not going to stay here. This is a key decision area. Watch for a move here. Up or down? Yes, up or down. Up or down. Wait for confirmation. Here's Citigroup. Watch the 200-day moving average as potential resistance. Here's JP Morgan Chase. Watch the 200-day moving average as potential resistance. Here's Zion's. Now, Zion's sitting right under its 200-day moving average. If it could get through it, could get a quick move up to the just shy of the 55 area, right? Or actually up here is 55. So watch this right here. It's consolidating. See if it could bust through. Again, one trigger to take is if it busts through the 200-day moving average. Another trigger to take is see if it breaks and then pauses again or pulls back. Right? One is more aggressive than the other. It's up to your temperament, right? Depending on how you like to trade. Let's look at Goldman. Even though technically a broker, it acts a lot like a bank. Nice consolidation here. See if that could get going up to the 200-day moving average. Speaking of the brokers, watch the 200-day moving average as resistance there. Got Morgan Stanley not acting so hot here, so I would kind of look for better fish to fry. How about the biotechs? I get crap all the time, people writing me saying, how come you keep forgetting to mention the biotechs? All right, so here's the biotechs moving up over the 5,000 number. Will it get back to new highs? Here's Biogen. Yeah, I mean, more sloppy than anything, but it looks like it may want to try to challenge these highs up here. Here's Amgen. That's just, yeah, too sloppy. Here's Immunogen. Yeah, look at this. Now, this is a lower price stock, and this looks like an inverted head and shoulders to me. So pay attention to this one because, again, it can have small risk. Now, granted, if you're looking at percentages, right, 50 cents on let's say a $6 stock, right, 50 cents on a $6 stock is a lot percentage-wise. But don't look at it percentage-wise. Look at it at actually 50 cents and set your shares that way. Say, okay, what can I lose 50? How many shares can I lose 50 cents on that's not going to hurt me? That's still going to be low risk. You don't necessarily have to look at it on a percentage basis. All right, so here's Immunogen. Let's see. Let's look at some of the glamour stocks. You got Amazon, just too sloppy for now. I mean, to me, this looks more like a short than a long, but that's just like if I have a gun to my head and you got to pick a side. Really, I don't see any reason to be trading this right now. So, gun to my head, I would say, yeah, it looks like it may want to drop through the 50-day, maybe at least test this low and perhaps, get a little bit lower, but there's no reason to trade it at all. All right. In order for me to get interested on the upsides, really got to break the 200-day and probably has to break this candle for me to really get interested. Okay. So, but again, better fish to fry here. Apple, look at this little consolidation. Yeah, it's between the 50 and the 200-day, so it may play a little ping pong, but I'd be watching this. Here's Alphabet. Sloppy, but right on the 200-day moving average. See, all these stocks that I'm mentioning, what are they? They are NASDAQ stocks. That's why the NASDAQ, despite the semiconductors acting well, right? These big-name NASDAQ stocks are just lagging. All right, but here's Alphabet, always be known as Google to me, of course, right on the 200-day moving average. Let's see if it can release from this one way or the other. How about the Zuck book? So the Zuck book, a.k.a. Facebook, right? Looking at this one over the past couple of weeks being in a consolidation. It's still in a consolidation. Was this a short? I mean, if you were aggressive, it was. But to me, this looks like a falling wedge. Again, I can't get biased on the long side until it gets over the 200-day moving average, but it's definitely gearing up for some sort of move here. Right, here it is. We got to move these things around here. Here we go. So, right, so if it were to pop up out of here, all right, I'm not going to sit here with my freaking trend line fetish and continue to update this. But anyway, you could draw it in yourself. But if it were to break out, all right, are you just looking for the wedge breakout or are you looking for the wedge and the 200-day breakout? I'm looking for both. I'm looking for the wedge and the 200-day moving average breakout. All right, here's bonds. So bonds are in a consolidation, a little bit sloppy here, but they've had a nice move off the highs. And can the market really see a lot of downside with bonds rallying? I don't know, right? Because when bonds rallying, rates are falling. It was different when bonds were falling and rates were rising. People were getting nervous. Now, all of a sudden, hey, look at this. We're back in the level, the TOT is at least, as we were most of last year. There's something to think about. Gold, using the GLD, man, Mike Swanson nailed this one. Let's see if this one is going to continue up to the highs. Let's look at the miners. Yeah, nice consolidation here. If this pushes out, the miners tend to lead the physical metal. So if this pushes out here, watch this 2334 resistance, and then look for this to go up to the highs, up to the 25 area. And then finally, oil. So oil is on the move as well after this basic collapse from up here. A big move down. Now it looking like it could get a bounce further. Again, it's between the 50 and the 200-day moving average, so we want to see what sets up here. But if this could get going here, a couple more consolidations, they could get going. Watch the 200-day to the upside. So let's do the recap. Most of the index, well, most, yeah, 3 out of 5, I guess that's most, right? 60% of the majors are above the 200-day moving average here. The SPY did close above it to end last week, but there is still horizontal resistance up here at right about 281. Okay, so let's see if it gets there. The Russell is below the 200-day moving average, but headed there, and the NASDAQ is in a small wedge consolidation pattern right at the 200-day moving average. It could be holding up this move, but if it busts out to the upside, yeah, then we could be well on our way and headed towards new highs. All right. My opinion right now is I would like to see the Russell bang into that 200-day and pause. I'd like to see the S&P bang into that horizontal line and pause. And then I would like to be able to lean against the pattern or the coil that sets up there so the risk can be small and defined. Questions? I'll try my best to answer them. Tiny@attackthemarkets.com. Don't forget to give me a thumbs up, leave a comment, hit subscribe if you never want to miss a video, and smash the bell so you are notified. That's it. I will talk to you in the intra-week updates or in next week's video.